Welcome to my channel. In today's class, we will discuss about a problem on net profit ratio, then return on capital employed, return on shareholders fund, earning per share, book value per share, dividend payout ratio, and price earning ratio. First of all, discuss about net profit ratio, problem on net profit ratio. The formula for finding out the net profit ratio is net profit divided by revenue from operations into 100. In this problem, we are given the percentage of gross profit 25%, credit revenue from operations given as 20 lakhs, cash revenue from operations amount directly not given but is given as 10% of the total revenue from operations, and the indirect expense of the company is given as 50,000. So from this we have to compute the net profit ratio. First of all, we can compute the total revenue from operations. Okay. So total, we assume the total revenue includes both cash and credit revenue. So we are taking the total revenue from operations as 100%. So the cash revenue from operations will be 10% given in the question. Then the remaining credit revenue percentage will be 90%. 100 minus 10 gives 90. So that amount, the 90% of the total revenue from operations, we are given the amount as 20 lakhs. So from this we can compute the total revenue from operations. That is, total revenue from operations I have taken as A into 90 by 100. Is equal to 20 lakhs. Hence, A is equal to 20 lakhs into 100 by 90. That is, we are cross multiplying. So the amount will be, this will be the amount. So then coming to the question, the gross profit ratio, the percentage is given. Gross profit ratio 25% means 25% of the total revenue from operations. So hence from this we can compute the gross profit. So gross profit is equal to total revenue from operations, we have already computed, into 25 by 100 or 0.25. The amount will be, this will be the amount. So net profit is equal to gross profit minus indirect expenses. So when we compute the profit and loss account, we include on the first item we include on the profit and loss account is in the credit side, the gross profit that we carry down, that we computed from the trading account, we carry down to the credit side of the profit and loss account. So the credit side minus the indirect expenses is the net profit. So there is no more items in the credit side, it's given the question. So only the gross profit is there. So hence the gross net profit is computed as gross profit minus indirect expenses. Indirect expenses, the question it is given as 50,000. So net profit is equal to gross profit minus indirect expenses. The amount, this will be the amount, 5 lakhs 5,555. Then coming to the equation, net profit ratio is equal to net profit divided by revenue from operations into 100. Revenue from operations, we have computed, net profit also computed, inserting it into the formula, we can get the amount percentage. It is the amount is 22.75%. Then return on capital employed or investment means return on capital employed is also known as return on investment. The formula is profit before interest and tax divided by capital employed into 100. Capital employed include both the shareholders funds and the long term debts of the company. Then Return on shareholders fund. Formula is profit after tax divided by shareholders funds into 100. Shareholders funds include both the equity share capital and the preference share capital. Earning per share. Earning per share formula is, it shows the earning per share available to the equity shareholders. So earning per share is equal to profit available for equity shareholders divided by number of equity shares. In this context, the earning refers to the profit available for equity shareholders. It is computed as profit after tax minus the dividend on preference shares. Okay. Then book value per share. Book value per share is equal to equity shareholders funds divided by number of equity shares. Then dividend payout ratio. Dividend payout ratio formula is dividend per share divided by earning per share. Then price earning ratio formula is market price of a share divided by earning per share. That's all for today's class. Thank you.